welcome to this event on universal credit. Thank you very much for joining us. I know it's the end of a long day, but I think it's testament to what an important issue it is that we're going to think about this evening, that so many of you have joined us, and we're really grateful to you for doing so. I'm going to start sharing my screen. You can all see that, so that you can check that you are in the event that you think you're in. So yes, the event is on the universal credit cut, what to expect and what we can do. Just before we get going, a few housekeeping bits and bobs. Firstly, we'll have questions to the speakers at the end of the session. So if you want to note down any questions as we go in the chat, then I will keep a log of them, and we'll ask them at the end. Please keep yourself on mute throughout the presentations and throughout the session. You'll have entered the session on mute, so that should be fine. Stay that way, take everything in, and then we'll talk to you through the chat. And just to note that you'll have noted when you came in that the session is being recorded, but on the published video it will only be the speakers who are seen, not the participants. So, So this is our running order for this evening. So we'll have a very brief introduction from me, and then we've got some absolutely excellent speakers who are extremely grateful to you for giving their time to be with us today. We have Lalitha from the Resolution Foundation, our own Keir from 4 in 10, and Katie Johns from the Joseph Rowntree Foundation. And then we'll make sure that there's plenty of time for questions and discussion at the end. So before we get started, before we think about what the future holds for us and for those we work with, it's helpful just to refresh and remind ourselves what the Universal Credit Uplift was in the first place, or is in the first place. So it was announced back in March 2020 in the grip of the COVID crisis in its onset as part of a whole suite of policies which included furlough. So there was an extra £20 were given to universal credit claimants in the standard allowance element. So the uplift has now been in place for 18 months. Originally it was set up for 12 months, but back in March that was extended for another 6 months. But it's worth noting that the benefit cap, the 2-child limit, and the rest of the eligibility criteria for universal credit has remained the same. Also, just a word on legacy benefits. You'll all be well aware, I'm sure, that not everybody is a universal credit recipient. Many people continue to receive legacy benefits. There was an uplift extended to those for 12 months, but that has now ceased. Those who were claiming working tax credits were given a one-off payment of £500 back in April, but beyond that, any additional monies they were receiving has been stopped, which did place many households in a very difficult decision, with the uncertainty now about knowing what would happen to universal credit in the medium and longer term, trying to make very difficult decisions about whether they should stay on legacy benefits temporarily, receive that extra money as a one-off payment, or switch to universal credit when should it be cut, they will be much worse off. They're very difficult decisions people have been facing throughout this process. So as it stands and where we are today, the government is adamant that the universal credit standard allowance is to be cut by £20 a week at the end of September. And claimants have already been notified of that cut in their work journal. And it's also worth noticing, of course, that many claimants who only began to receive universal credit at the outset of the crisis will not have experienced receiving a lesser amount of universal credit. So for this, then it's not an uplift; it's what they've got, and it's going to be an enormous shock to their financial situation to lose that. And there are no further plans for any further payments for those in receipt of legacy benefits. So that's the situation, the sorry situation we sort of face today. I think there's been a kind of whole slew of reports over the past few weeks. We had the Nuffield Foundation coming out today with new research about rising levels of child poverty. Now 1 in 3 families with a child under 5 experiencing poverty. So I think there can be no doubt as to the severity of the situation and what we face. So we're going to spend the next period together. having a think about what that impact will look like, particularly for those of us working to support families here in London. What can be done in practical terms if, we very much hope that it won't, but if the cut does go ahead, what can be done in practical terms to support people that we are working with? And then hopefully to kind of uplift us at the end, Katie from JRF is going to talk to us about the campaign, which is very much still ongoing. The fight is very much still live to try and do everything we can to stop that happening. So without further ado, as they say, I'll hand over to Lalitha and the Resolution Foundation to talk us through what the impact will be if the cut goes ahead.
Thanks, Catherine, for that introduction. I'm just going to share my screen. Hi, so I'm Lalitha. I'm a researcher at the Resolution Foundation, and through the pandemic, we've been doing a fair bit of research over the effects of the uplift to universal credit and sort of the effects of what will happen if the cut goes ahead. So I'm going to talk to you today about what to expect if this cut to universal credit does go ahead.
Sorry, we've got quite a lot of feedback on the line from somebody there.
I think is it gone now?
Yeah, we've got that, thank you.
Okay, great. So the first thing that's worth noting is over the past 10 years, things haven't been looking very good for people in terms of sort of household incomes, poverty rates, inequality rates, and the benefit system. So income growth has actually stagnated over the last decade. So if you look at the income growth for the 2010s, this was like pretty low at 9% when you compare it to previous decades, and it's actually the lowest rate of income growth per decade since records began. So although income growth in the year just leading up to the COVID crisis was actually relatively high at 5% in that year, when you sort of spread this 9% income growth over the decade, this equals out to an average annual income growth of 0.8% per year, which is pretty low. So it's also worth noting that although poverty rates for all people, so poverty rates in general and working age people have remained pretty steady over the last 10 years, poverty rates for pensioners and significantly children have increased a fair bit over the last 10 years. So the poverty rate that we're using in this chart is the relative poverty rate. So this is defined as 60% of the median household income after housing costs. And while we're talking about London today as well, it's also worth noting that the poverty rate for London is higher than any other region in the rest of the UK at 38%. So a lot of the changes to the benefit system and the cut to universal credit that we're talking about today will have quite a significant effect on people in London compared to the rest of the UK. So talking about child poverty a bit more. So child poverty has especially increased for children in larger families. So over the last decade, families with 3 or more children have seen a really significant rise in poverty. So at the moment, families with 3 or more children have almost double the rates of poverty of families with 1 or 2 children. And this increase in the child poverty rate has primarily been driven by benefit policy. So for example, we had the benefit cap introduced in 2013 and the 2-child limit introduced in 2017. And these are both policies that restrict the amount of benefit families are entitled to, which means that families with more children who have sort of higher costs are struggling even more to meet those costs now. As well as sort of like poverty rates and income growth rates, it's also worth talking about how people on the lowest incomes were affected in a sort of more material sense. So people on the lowest incomes before the pandemic were already struggling with food insecurity. So 24% of people on the lowest incomes had low food security, compared to 9% of people in the general population. So this shows us that our benefit system isn't meeting basic needs for many people. So it's not even meeting the basic need of having enough food for a significant amount of people. So another thing our benefit system is pretty bad at doing is maintaining a decent standard of living for people. So this chart shows the amount of money that people need to maintain a decent living standard. So this is using the minimum income standard measure. So if you look at the 2019-2020 benefit generosity line, so the benefit system pre-COVID was already quite far off meeting these standards. And even with the uplift, our benefit system was still nowhere near meeting these standards, or even meeting the absolute poverty threshold either. So next, I'm going to talk to you about the effect of the uplift to universal credit during the crisis. So sort of when COVID hit, we had this very significant economic crisis. So in 2020, GDP decreased by 10%. So this was like a very large and very sudden hit to the economy. However, employment rates and household incomes didn't increase by an anywhere near significant amount compared to GDP, which might be surprising, but the reason for this is because people's jobs and people's incomes were protected by government policy. So by government policy, I of course mean the uplift to universal credit, which really helped protect household incomes, but also the furlough scheme and the self-employment income support scheme. Another thing that's really important to note is that when the crisis hit, the number of families on universal credit increased significantly. So as you can see, there was like quite a large jump as the crisis hit, and these numbers have been like steadily increasing ever since. And this is also significant when you bear in mind the fact that more families will have been benefiting from this uplift to universal credit, but this also means that more families will lose out on £20 a week or over £1,000 a year if this uplift is cut. So another important thing to keep in mind is the fact that our benefit system is pretty bad at replacing lost income. So one of the main functions of a welfare state is to protect people's income, say if they lose their job, for example. And compared to other countries, our system is pretty bad at this. This is because we replace like lost income from work at a flat rate. So for universal credit, everyone gets the same amount, sort of regardless of their previous job. Whereas in other countries, they will replace incomes that are rate proportional to the income you're getting from your previous job. So a lot of people who will lose their jobs and then go into universal credit are really not receiving enough money to meet their needs. So although obviously having £20 a week in your pocket, more a week in your pocket is a great thing for people, costs did increase quite significantly for people on universal credit during the pandemic. So over 1 in 5 families fell behind on essential bills during the crisis for people who were on universal credit. And this is in comparison to 6% of all adults. So people on universal credit were suffering disproportionately from not being able to pay their bills. And also universal credit claimants saw increasing levels of debt compared to the rest of the population. So 31% of universal credit claims saw either new levels of debt or increasing debt, and that's compared to 13% of the general population. So next I'm going to talk to you about what to expect if the cut to universal credit does go ahead. So to put the cut into context, it's really important to bear in mind that this cut will be the largest overnight reduction to benefit support we think ever, but at least in modern history. The only thing that comes anywhere near close was the proposed tax credit cuts in 2016 to 2017 that didn't actually go ahead, or the 10% cut in employment benefit in 1931. So that sort of shows how significant this cut to universal credit is going to be for people. This is like an overnight cut in comparison to other sort of benefit cuts that have happened within the last decade, such as the benefit freeze just before the pandemic, or the 2-child limit and end to the family element. These were cuts that affected some people at first, but were sort of more spread out. So the effect of these, while sort of very important, were not as immediately significant. So obviously for people, this £20 a week cut means a significant loss of income. So the poorest households are projected to lose 6% of their incomes. So obviously this cut will be affecting the poorest people who are more reliant on benefits than people who are more well off. And another thing we found in our analysis is that 1 million people on universal credit will be losing over 10% of their incomes, which is a really significant amount, especially if you're already on a pretty low income to begin with. So I'm going to move on to talk about London a bit more specifically now. So we found that London is set to be one of the areas the most affected by the cut. So this chart shows the proportion of households set to lose over £1,000 in universal credit if the cut goes ahead. So we can see that London is set to be one of the areas that will be affected the worst. So 22% of households in London are set to lose over £1,000 in universal credit. Another important thing to bear in mind is that, as well as the loss to people's incomes from this cut to universal credit, London has had a really tough time economically during the pandemic compared to other regions. So this chart comes from the labour market statistics that came out today, so it's pretty timely. So sort of the non-shaded bars show how significant employment, the worst employment drops over the course of the pandemic were. So in London, London suffered the most by facing a reduction in employment of 5.8% at one point. And for most areas in the UK, employment rates have recovered from the pandemic, or they have been exceeded by, current rates have exceeded the pre-crisis levels. But for London, these rates are still pretty low. So employment in London is 1.8% lower than it was before the crisis. So as well as the cut to universal credit coming up, we're also facing the end of the furlough scheme around the same time. So these are sort of two hits to people's incomes that they can unfortunately expect to see. So when talking about London, it's pretty important to talk about furlough as well, because London has higher furlough rates than the rest of the UK, specifically North London. Now, this is because of the industries people living in these boroughs will work in. So, for example, a lot of people may be working in sort of the hospitality sector or more customer-facing roles that haven't quite recovered in central London, whereas they may have recovered in other parts of the country, or a lot of people may be working in the travel industry, which is of course still struggling from the effects of the pandemic. So I'm going to conclude by summarising why this cut to universal credit is so important. So in the lead up to the crisis, we've already had very slow income growth, high levels of inequality and poverty, and a benefit system that doesn't meet people's basic needs very well and doesn't provide people with a decent standard of living either. So people were already in a situation that wasn't great before the crisis hit. And then when the crisis hit, we had the £20 uplift to universal credit. This helped protect families' incomes and compensate for a benefit system that had been weakened over the last decade. However, it was still a time of increased costs, and families still struggled with bills and debt during the crisis too. And now we're sort of leading up to the cut, and families are set to lose up to 6% of their incomes, with London being specifically an area that is likely to be the most affected by the cut and has already been weakened by the economic effects of the crisis too. Thank you very much.
Thank you so much, Lalitha. How you managed to fit quite so much, so much information into such a short time, I'll never know, but it was really, really helpful, I think, in terms of giving us that context, both historical and sort of geographically as well, in terms of the rest of the country about what's going on and just how much Londoners are going to be affected by this. You know, I think those figures are, you know, they are frightening in the sense that they affect so many people, and they expect them so deeply as well. It's, you know, there's breadth and depth to the impact that it's going to have. And I think, you know, I'm sure everyone on this call is sort of, you know, feels that coming, but it's great to have it sort of, you know, set out for us with such clarity. So thank you very much. We're going to move on now to Keir. Keir Lewis is our Research and Learning Officer here at 4 and 10. And he's going to take us through what financial entitlements will look like if the cut does go ahead, and sort of think a bit practically about how we can help people to make the most of those. Thanks, Keir.
Yeah, thank you, Catherine, and thank you, Lalitha. So yeah, as outlined by Catherine and also by Lalitha, it's going to, should the cut go ahead, which fingers crossed doesn't, you can anticipate a large impact on many Londoners, 2 in 5 2 in 5 households in London that are non-pensioner households. Invariably, this is going to impact the other elements of what is an already complex benefit system in the UK. One of the things you might have noticed from Lalitha's graphs is with regards to some of the legacy benefits and the additional benefits you get with universal credit. And so what I hope to cover in this next section is where you can go looking for some of those additional benefits to potentially dampen the impact of this cut, and also potentially increase the income of individuals should this cut go ahead. I think it's important to, before I go into some of the more technical stuff, to talk about sort of 2 approaches or themes with regards to that. The first is damage limitation. I mean, we all don't want this cut to go ahead, but the relative importance of some of the other financial entitlements which are underclaimed in London will increase. There's a significant proportion of benefits in London that are underclaimed in particular councils, and therefore increase in relative importance. As outlined by Lalitha, this is going to already mean real terms reduction in income for 2 in 5 non-pensioner households. to the tune of £1,000. But what we can do, you and I and those working in the voluntary community sector, is we can increase our awareness of alternative options to potentially dampen the impact should this go ahead. One of the ways that one of the approaches is damage limitation, but also when you're going about this post universal credit cut, you may encounter claimant stigma if you don't already encounter it in your day-to-day life. One of the big issues with claimant stigma in some of these other financial entitlements is it can inhibit individuals from claiming stuff which they are entitled to, and will significantly improve their financial position. Whether it's some of the symptoms of stigma, be it top down from media and Westminster, or bottom up from other groups that inhibit individuals, the result is that £2 billion in unclaimed benefits sits within London. Nationally, the cut is worth £6 billion. So there's £2 billion of unclaimed benefits in London. Gives you the scale of how important some of these other benefits can be. And also to illustrate that a bit further, you have 2 in 5 pensioners in London. They're eligible for pension credit. So that's a little bit different to universal credit. This is for those that are over state pension age, but they're also not claiming, that they're eligible and not claiming it. And this has an impact on families, because if you are eligible for pension credit, it can alleviate financial positions for your family if you're in a multi-generation household, for example. So those are sorts of 2 symptoms there. I am going to go into some of the specifics of financial entitlements, but if you want to remember one thing and snooze for the rest of my talk, I hope that it's this benefit calculator. You may have heard and may be familiar with many benefit calculators, such as that by Turn to Us and Citizens Advice. I'll make the case as to why policy and practices is very useful for just talking about the 2 things I just talked about, which is damage limitation and stigma. This takes 5 minutes to do. It is very, very simple and easy to use in comparison to some of the other benefit calculators, which can be a little bit more complicated and overwhelming for individuals. So if there's one thing you do remember, or one thing you do take from this section, I hope that it is that you can skip over a lot of things by using a good quality benefits calculator, such as those by Policy and Practice. Moving on into some of those actual entitlements that will increase in relative importance. One of those will be discretionary housing payments. Now, what discretionary housing payments are they're essentially additional money on top of housing benefits, or the housing elements of universal credit. So either legacy benefits or universal credit. So additional sum of money to help you with your rent or housing costs if you are struggling. Now, these are underclaimed in some London boroughs. In other London boroughs, they're already almost at max capacity, and they some boroughs aren't accepting individuals in terms of claiming discretionary housing payments. However, with the universal credit cut, these will increase in relative importance, and they are underclaimed in many. So the way you can go about accessing discretionary housing payment is via your local borough council. It is ultimately up to them whether they are going to give it to you, but the eligibility is simply that you're either on legacy benefits or universal credit and claiming the housing elements, and you have a shortfall in rent and therefore needs that topping up. They'll decide how much they'll give it to you, and how long they'll give it to you, and how much they'll give it to you. Just typically, they will want to see that you will come off needing it in sort of 3 or 4 months or even shorter. So if you are talking to London Council who's supporting others in applications for that, it's useful to let them know that it's useful for you to give an indication that you are going to come off at some in that point. And we've got a link which you'll receive in the slides following today's session there. Another part of the big complex benefit system that we have here in the UK is council tax. London Borough Councils were particularly efficient in getting out council tax discounts over the pandemic. It's changed a little bit now as we're leaving lockdown. However, there are 2 ways in which you can support individuals in terms of their council tax bills following the universal credit cut. The first one is very straightforward. That's a simple council tax reduction. Now, council tax reduction is for individuals that Again, it depends on your local council, what their eligibility criteria is, but generally speaking, it's that you're in some kind of financial difficulty. That can mean that you're in receipt of universal credit or legacy benefits or not at all. And they may be able to give you a council tax reduction. It does depend on borough to borough, but if you are given a council tax reduction, typically it's in the ballpark of around 25%. Again, some London boroughs, these are underused. So following the cut for universal credit, these will increase in relative importance, especially as it's one of your more expensive bills. The second is not to be discredited in any way, shape or form, is a council tax discount. Now, I'm sure many of you are already aware that in the UK, in order to pay a council tax bill, you need 2 adults in order to be liable to pay a full council tax bill. That's not something the council will pick up automatically. So if you're working with someone who is on receipt of universal credit or in any kind of financial difficulty and they're living alone, or they've recently gone through a breakup or etc., they are eligible for a council tax discount. And that can be anywhere between 25% or 50%. Also included, we've got a full list of exemptions for that. So other exemptions include someone who's in a full-time education, someone who is a full-time carer, for example. So it's worth checking that list because it can significantly support your monthly outgoings and income. The final sort of part with reference to councils is local welfare assistance. Now, this if you can gather the running theme, is very much dependent on your local borough council. What this is in principle is it's a pot of money which is available to individuals that go through a time of crisis, which can be used for things such as household items if they're necessary, food, energy, sport, etc. But in reality, all of these different councils do it a little bit differently. So sometimes they give cold hard cash, sometimes individuals give items, and some don't have schemes at all. So it really does depend on your local council. There are some absolutely exceptional ones, and there are some not so good ones. What we have got is a link there, so you can find what your local welfare assistance program is, and how to go about sort of inquiring about it. But just to reiterate there, if someone has a one-off struggle with, say, household appliances or items, energy or food, this is typically where the local welfare assistance comes in. Moving on quickly, and you might be gathering the theme, this is very sporadic. Yes, it is very sporadic, and hence why the impact of the universal credit is going to be so large. You really have to go looking for the other support that is available to your monthly outgoings. But it is there, and one of the options you do have is with regards to energy. Now, the first bullet point there was suggest that you should switch your energy provider, and I'm very well aware that this is going to appear upon first hearing. This is a very middle class suggestion. Just switch your energy provider, and it will make up for a £1,000 income shortfall. What we mean by this, and what I mean by this, is that it can significantly support within the context of what's also coming. So there are price hikes in energy which are coming in October, almost concurrently with the cut in universal credit, and the average is around £100. But for many individuals, even on low tariffs, it can be in the space of £200, £300. So what you can do, you have a very short window in which you can look at alternatives which are cheaper. There are a number of ways you can do this. You will be familiar, and the people you're working with will be familiar with price comparison sites. They are fine so long as they're accredited through Ofgem, but you can also use your local energy partnership. This is a free service that helps low-income home switchers save money. You can refer clients there, or they can self-refer. The eligibility is extremely broad. One other thing you can use in terms of breaking down that stigma or encouraging individuals is that even if someone's in arrears, they've been in arrears for less than 28 days, they can still switch to avoid this catch coming in October. And if they're on prepayment meters, which typically some individuals that are on a low income or universal credit might be on, they're less than £500 in energy or electricity, which is a lot of money in terms of that, they can still switch. The last bit is a bit of hope, and that's with regards to grant schemes. Most energy providers do have their own grant schemes, so if someone does fall into energy poverty, that can be alleviated. But if you want to sort of give it encouragement, the British Gas Energy Trust do actually give grants out to customers and non-customers, and they do tend to help you with regards to that switch as well. So those are a number of options there in terms of damage limitation. Also, quickly on with water, I know that this, in comparison to gas and electricity, is a little bit smaller and council tax, but it all can accumulate. With regards to water, if you are working with people who are on universal credit, and the vast majority will be earning less than 19,750, 750, they can ask Thames Water to be placed in their low income social tariff. Their eligibility is simply that, so you have to be earning less than 90,000, which from this cut, the vast majority will be. There will be a few exceptions, but the vast majority will be earning less than that. This is not something that, unless you have a fantastic work coach, that you will be placed on. There are lots of new work coaches getting trained, so they may not be aware of this to start with. So one of the things you can do is increase awareness of this, because it will, again, support an individual's income. Essentially, the way that works is it's a reduced tariff by, it depends on your income, but it's a very useful scheme. I'm also aware that some London areas aren't covered by Thames Water, in which case that they still have those schemes. All water supplies in the UK do have it, but it's just called something different. And on the right-hand side of your screen, I just want to raise awareness for another scheme which increases in relative importance, and that's Watersure scheme. That's all right, they're all called Water Help and Watersure, but the Watersure scheme is important because if you are in receipt of benefits, so that's either legacy benefits, pension credit, or universal credit, you have a water meter, or you intend on getting a water meter, and you use a large amount of waters due to having a lot of children. So Lalitha highlighted that a lot of families in the UK struggle with regards to when you have, for example, more than 2 children due to the benefit cap. This is something that can support you with those bills, because if you have a large amount of you have to use large amounts of water because you have a lot of children, then the Watersure scheme can support you here. The other really important element is if you have a medical condition which requires you to use more water, for example, eczema. This is something you might not disclose when possibly speaking to your work coach, because why would you assume that that implicates your benefit claim? But it would actually support you in terms of capping how much money you would be paying on your water bill. I think I'm overrun a tiny bit, but I'll just try and wrap up in terms of some more things that would increase in relative importance. Personal dependence payment is an additional payment. It's separate to universal credit, and it's for those that live with a physical or mental health condition or a disability which impacts their day-to-day life, and it would give you £23 to £152 in the most severe cases. It's quite a general criteria as in terms of eligibility to start with, and it gets a little bit complicated as it goes along, but I'll go and explain why it's important and increasing in relative importance. I mean, as you probably worked out, that if you were to receive this, including the decrease to universal credit, your income would be topped up beyond what it would previously was. Generally speaking, to be eligible for this, you need to find it hard to do everyday tasks. On the right-hand side of the screen, you have a list of some of those tasks, and you have to have found those difficult for at least 3 months and expect it to continue for another 9 months. So that's the basic eligibility. And for those that have worked with this, you'll know that it's not that simple in terms of the process of getting a personal independence payment, and it's a lot more traumatic than simply going through what I've outlined. But the reason why it's worth highlighting is 2 things. Firstly, as a result of universal credit, directly or indirectly, you'll likely see an increase in symptom severity if individuals are, for example, experiencing a mental health issue. That's inevitable. We've seen stories of that already. We've seen financial distress. So whether someone previously might not have been eligible because they may have been okay at the time, this universal credit card may be so brutal that it does impact their symptom severity, whether causing or just increasing. and therefore they might be eligible now, whereas previously they weren't. And the second and probably the most important part of this is Lalitha right at the start showed you the impact of the benefit cap and how damaging that is to the lives of Londoners that are in receipt of it. If you receive a personal independence payment, you actually become exempt from the benefit cap. So not only would you be, not only would the income that you were lost from the universal credit cut be replaced, but you could actually end up possibly increasing. They'll likely see an increase in applications to personal independent payments as a result of this universal credit cut. Sometime maybe out of necessity, but for others, they may already not be claiming this because of the stigma. So one of the most powerful things you can do is support individuals to get to the point where they're ready to claim for a personal independence payment. For those that know about personal independence in more detail, you understand that the assessment procedure can be very cruel. Fortunately, there are 2 organisations in which you can seek the support of to get to that point. But one of the things you can do is encourage individuals, if they struggle with any of these, to get to the point of wanting to claim if they are eligible, because it will massively financially support them in light of the universal credit cut. And if they are living with any of those, then ideally they should be claiming it anyway. But that's something that you guys can get to the point of claiming. Lastly, before we get to the questions, I want to talk about debt. It was something that Lalitha talked about as well. They mentioned that that even before the coronavirus, that vast numbers of households were falling into debt, and potentially as a result of universal credit, that's going to increase further. There is one option with regards to lending money when you are in receipt of either legacy benefits or universal credit. And the reason why I'm raising that as a potential option is because, as many of you may know and work in the community, for those that will experience this cut, they may be inclined to lend from potentially friends or family. They might take it out from more exploitative lenders. They may also take it out from loan sharks or individuals that are willing to do them harm. What you can see on screen is the 2 options that you would have, even if you're in receipt of universal credit or legacy benefits, and they're called budgeting advances or budgeting loans. The reason why I'm raising this as an option is in you being conscious of them as an option is whether you want individuals to take out a loan at this time or not, which obviously ideally we don't. Being aware of them can help prevent individuals from taking out loans which will put them in a worse financial position, such as from the sources that I mentioned. The reason why what you can see on screen is why it's so good, but essentially it's a 0%. So in comparison to some of those other options, it can be a potential option. As I said, ideally we do not want individuals to be taking loans out, but the harsh reality is this will force individuals to look seriously at taking out credit. And if they are seriously taking out credit, we don't want it to be from positions that will exacerbate their scenario. So it's useful for you to be aware of those options and mention them in passing, because even if they're not telling you that they're looking at them, they may be. The last point is on for those that are in debt. So again, on what Lalitha said about the increase in debt, and that's called the breathing space scheme. It's a new scheme which came in around April. The breathing space scheme is really important because, again, with the theme of stigma, a lot of individuals that may be impacted by the universal credit cut or are currently in debt right now, they can actually get some support through the breathing space scheme. What the breathing space scheme is, essentially it freezes any payment or legal action by creditors. So that can include a landlord, they're privately renting. It can include the council. It can include any other sources of credit that they may have. And there are 2 types of the scheme. There's a standard 60-day breathing space, which freezes that action. And there is a mental health crisis breathing space. And for that one, you need to be seeking the support of a mental health professional. For both of them, you need to access that through a free qualified debt advisor. So one of the things you can do is effectively signpost if someone mentions that they're struggling in arrears to get access to this breathing space scheme. It is a very encouraging scheme because it allows individuals to get back on their feet, and there are two options within it. So as a result of universal credit, we will see an increase in debt, and this is one of those schemes that could potentially prevent it.
Thanks so much. No, look, you can't get through an online event these days without some sort of glitch. So I think we're doing okay. No, that's great. Thank you. And that's, I mean, it's just great to see so much practical advice, you know, being laid out, because we might need it, but let's talk about how we can try and stop us from needing that. So great, really kind of you to ask JRF to come and speak to you today, because this has really been, stopping this cut has really become an organizational focus really for just over a year now, and we are encouraged by, you know, the growing support on this issue that we see on a daily basis. In fact, earlier this summer we were sort of a little bit worried about having to fight to keep this on the agenda during parliamentary recess, but it turned out to have a life of its own, and I think that speaks to the realization people are having about the impact this is going to have. And there is still time to change the government's mind. So we are now, you know, less than a month away from the cut happening, if they go ahead with it, but there is time. So I'm sure some people here are sort of familiar with what we now call the Keep the Lifeline campaign, but I thought it might be useful if I spend a few minutes just taking you quickly through the last 12 months so you have a bit of context for why we're doing what we're doing now. So when I say the Keep the Lifeline campaign, Keep the Lifeline is our hashtag. It's really our slogan in a way, but it is a sort of informal campaign. It was the hashtag we developed for this sort of loose coalition of organizations that started coming together end of last August, kind of early September, on this issue. And we now we call it a campaign, and certainly internally it is a major campaign for the Joseph Rowntree Foundation. So it might interest a lot of people on this call that before we had this focus, we actually did think about, or we had intended to really focus on child poverty, and had joined up with Save the Children early last summer and, you know, kind of 2020 to fund some polling on that. We're looking at it, but as the summer rolled on and as the pandemic continued, because no one knew what was going to happen, and we learned that there was not going to be an autumn budget, it just became clear that there was a real danger that this £20 increase that the government had rightly introduced was in danger of being taken away. It also became clear, as you know, we started working with Save the Children, and that kind of always, you know, once you start working with one person and you realize you have shared interests, it introduces to other conversations. And what we saw was that there was this shared understanding across the sector of how important this particular issue was, of this £20 increase to universal credit and working tax credits. You know, and how it was addressing what was arguably an inadequate system pre-pandemic, which Lalitha has laid out really clearly, because, you know, you might have noticed in a lot of her charts, the information that we can now analyze, you know, we're just starting to get into the numbers at the beginning of the pandemic. So it was already really tough for people coming into it. And of course, with the shared understanding, what followed was this shared concern of like, what would happen if this support was then taken away, if it was cut. And we also had a definitive timeline. So as Catherine laid out at the beginning, it was introduced for 12 months. So once we knew there was a budget in April, we knew that this was the moment where something had to be said or not said. And, you know, last autumn, essentially this April was around the corner. So we had this unique situation where we had kind of some consensus in the sector, and we had a deadline to work towards. And we decided that the best way to harness these circumstances, the situation that we had, was to align the messaging of the people who cared about this, build a shared narrative, you know, a simple, straightforward one, but a shared narrative that we could all speak to, and to get it out into the public domain early. So to try and control the conversation around this issue, because we had spotted it in the summer, we knew that there was going to be a spending review in the autumn, and we thought, well, we need to get in between, you know, as early as possible. So at the time, JRF kind of played and continues to play kind of a facilitator or a convening role for these allies, as we say in this coalition. You know, able to use some of the in-house resource that we are blessed with, that to help developing this messaging, this narrative. I'm speaking of creating some sort of brand neutral assets that can be easily shared online on social media, that everyone could use, and to throughout the period also offer some analysis as well, which was great, and we're happy to do that. But what I cannot emphasize enough that the real power of this campaign comes from everyone involved playing to their own strengths. So JRF might have some in-house resource on this, but we are not a frontline service provider. We don't have a membership base. And the voices of people who are directly impacted by this really are truly the most valuable. And that's only becoming more so as we get closer to the cut. So starting last autumn, we, with the group that was forming, which initially, if I recall, was around 40 organizations, we did a joint and open public joint letter to the Chancellor. Ahead of the spending review, we then did a joint response when this issue wasn't even mentioned by him in the autumn. We then pushed hard again, just by keeping things simple, sticking to our core narrative, pushing for an announcement for this increase being permanent at the spring budget. We got a 6-month extension instead, which was, you could argue, is better than nothing, but we then knew that the real battle was going to be the next 6 months, because the end of that period, it was going to be a lot tougher. So because this will become important as well, we decided around this point that it would probably be good to change our language a little bit. So once he announced the 6-month extension, and we knew that we were going to be facing this fight for the next 6 months, we decided that rather than talking about the uplift coming to the end, we would change our speaking to more about an increase and a cut. And that's where we brought in this real language of cut. And we wanted to do that because we then wanted to really center this support that had been introduced as being the norm. And move it away from the government's language, essentially, but also keep it in a space where there was room for a positive action. So, you know, you can keep the increase, keep the lifeline, it's in the hashtag, because this is really important for, you know, successful campaigning. So we wanted to make it clear now that this, you know, as we like to say now, if it looks like a cut, it feels like a cut, is it a cut? It is a cut, but that there was still space for the government to change their mind. There was a decision to be made. Also around this time, we saw an influx of interest in joining the campaign, which again is a still technically informal coalition of people aligned on this interest. And we think that a reason that was that has been successful, this sort of growth of the group, was that we had this simple message, a consistent message, and it was adaptable. So, you know, we have a really wide range of organizations now campaigning for this, kind of under this banner, and everyone has their own lenses, has their own interests, their own specific asks, but Keep the Lifeline is quite adaptable, and you can hang a lot of things kind of in and around it as well. So we think that gave people, you know, it gave them space to sign up for this, but also do what they needed to do with their own kind of individual priorities. We weren't going to pretend that everyone could just focus exactly on this forever. And essentially, as more voices joined, we were able to capture more attention, not just from the media, but increasingly from Conservative MPs. And, you know, because there's a majority Conservative government, that's really important. And we started seeing more interventions from them. So you've probably noticed over the last few months, you know, all 6 former secretaries of state for the DWP have come out calling for this cut not to go ahead. The select committees from the 4 nations have come out. Individual backbenchers have written public letters, you know, spoken up, written articles. You know, last week we saw, you know, prominent Conservative Mayor Andy Street come out on this as well, you know, expressing his concern. And it's sort of grown from there, and it's continued to. So I just want to take a moment, speaking about the growth. It's not to say that there hasn't been challenges, and I'm sure some of this will ring true, especially as everyone else who has spoken has touched on a lot of this. So a big thing was we have all along the way tried to get attention on the issue of legacy benefits and how this increase really needs to be extended to them. And we've struggled to get people's attention on that. And, you know, Catherine mentioned at the beginning that it's not as easy as people think. And because I think the system itself is already, you know, there's a lot of factors to consider, just a lot of elements going on, it can feel a bit complicated. To introduce another thing into that of why can't they just switch was really hard. So that's something that we've struggled with, but we also feel is really, really important to continue talking about, that it should be extended. And many of you may be aware of the court case that is going to be in front of the High Court at the end of the month on that issue. Another challenge was even just sometimes MP or journalist understanding of universal credit. So having to walk people through that, and also claimant awareness. So I think this is really changing now. But, you know, I think, as, you know, Catherine said earlier, that the people have been notified in their journals now that's happening, but some people didn't know they had an increase because, you know, as your situation changed, the amount changes anyway. And then, of course, there was people, as was also previously mentioned, who have only ever had this amount and now have been told it was taken away, so didn't know that, you know, there even had been an increase. So I think that's changing, but that was something that we found a bit of a challenge. And then getting this issue in MP inboxes has been a huge thing, and that's really going to lead me into what is important now. So going into the summer, we kept hearing from MPs that they just weren't seeing this in their inboxes. People weren't writing to them. So, you know, the sector could talk about it. We could talk about it in our, you know, our private conversations with them. But, you know, until they start hearing it from their constituencies, it was really hard to get them to really get on board. So kind of coming back now into where we are and where we can go. You know, I mentioned before that we had a busier summer than expected. I think a big reason that happened is because everyone was aligned on this issue and kept a steady drip feed of stories, and, you know, where capacity existed, new research coming. You know, we went into recess we tried to have that big line about, you know, how this was the biggest cut to the basic rate since the introduction of the welfare state. And we came kind of out of recess with some constituency analysis, which really emphasized to MPs how this would impact them, you know, at home, hit them at home, if you will, as well as a joint letter that you're probably aware of, particularly because 4 in 10 signed up for it, that we published to the Prime Minister asking for him to stop this. So all of these interventions over time have really built up layers of pressure, and you'll now see that in coverage, there's a lot of callbacks to things that have happened. We're also starting to see more local coverage and more Tory backbenchers speaking up about this, which makes us think and hope that it is starting to land in inboxes. And it's really important, we think, at this point, that, you know, we know that everyone on this call, this is a moral choice to us. I think we all know it's an economic choice, but with only 3 weeks, you know, 3 weeks left to go, we have to make it land as a political choice, and one that can be acted on positively. I mean, they can make this decision to not go ahead with this. So there is time, but the window is closing. So we want to sort of look at what has been successful, which hopefully you have a sense of now, and just, you know, keep using that to keep the momentum and building the pressure. So in a way, it's quite simple. We think that the message just needs to keep coming through more strongly on a constituency level into MP inboxes. You know, again, we have a majority Conservative government, so the more that can get into the inboxes in Conservative constituencies, the better. We have some tools that I will share with Keir and Catherine afterwards, who can distribute, that can help you with this. Some templates that people can use to write to their MPs. We've tailored them to whether it's a claimant, a general supporter, a local leader, because that also makes a difference. They want to hear from claimants, but if you are frontline workers, so if you are the kind of the intermediary with the claimants and you see what's happening, it's really important that you write as well. If you have a network where you have good relationships with local leaders, get them to write to the local MP. Those voices that can speak most closely to the impact are really important. And it's the picture we need to paint. So I can talk a little bit more about the kind of our writing to MP strategy, but just to say quickly too, if this cut goes ahead, what next? And to be honest with you, that's still a live discussion with us within JRF. We want to make that a painful moment for them. The cut will essentially come into effect during the Conservative Party conference. So that, is leaving an opportunity for that. There will then be about 3 to 4 weeks before the newly announced budget and spending review on the 27th of October. So, what is their plan if they make this cut? What are they going to say in the budget to support the people who they've just taken away income from? Can there be a U-turn? These are questions that we're asking ourselves, but how do we make this kind of politically painful for them and keep the pressure on, because it will be a hard moment if the cut goes ahead, but we've got to kind of keep going. And then more longer term than that, we, as Lalitha laid out right at the beginning, going into the pandemic, the system, was inadequate. We are trying to, when we have discussions, stay away from even tying this increase to the pandemic. It was something that was needed anyway. That's why they introduced it in the first place. So how do we then build a consensus around, that investment is necessary? And when all these organizations, so our recent joint letter, 100 organizations joined that, which is amazing, but that's 100 different priorities. And if the cut happens, there's going to be, people are probably going to want to sort of return to their own focus, their own lens, their own priorities. So, we're really open now to having discussions and hearing ideas for people about how we can keep this consensus. We think that in the immediate backlash, there is, great opportunity for that, or a strong likelihood, I should say, of being able to maintain that. But, we're really happy to have discussions with people about how we might maintain that beyond and look at longer term strategy. So I want to leave, lots of room for questions for everyone, but just quickly to say on kind of again, to emphasize the right to kind of MP thing action is, we need people to paint the picture of what this impact is. So, you can be critical, but there's no need to be nasty. Focus it on people's experience. What does this mean? What choices are people going to have to make? We hear from people, this 20 pounds means the difference between being able to shop in a supermarket or going to the food bank, between, making sure everyone in the family gets a healthy meal, or do the kids get a warm bath? Really difficult decisions. And the more that MPs can hear that and understand people's individual stories and situations, the more impact that's gonna have. Even the public, the more they can understand how this impacts an individual life, what's the individual story, the more we hear that, the better in the next few weeks. We know that the government is going big right now on the get people into jobs element, but there is, a significant percentage of people on universal credit who are unable, and to be honest, not expected to work. And outside of that, most families, in receipt of UC and working tax credit are working. So the more we can, paint the picture of that, the better as well. And the government won't be able to as easily just kind of say jobs are the answer, because I think we all know that new jobs are great for those who can work, but no one's going to have a new job or a new set of skills on October 6th when those first people get their new, their new notice minus £86. And then the final thing I'll say is that I'm sure this is represented across other organizations, particularly the larger ones, but we are getting several requests daily to speak about this issue from the media, and they want to talk to people who are directly affected. But, as Keir pointed out in his slides, we know that stigma is a really big issue. And so it can be difficult to find people who are willing to speak to the media. But if your organization or maybe a bigger network that you are part of is able to or knows of people in your networks who are willing and have been sort of trained and prepared to speak to the media, if they are able, let that network that you're part of know. If you want to let us know, we are happy always to signpost to other organizations who can facilitate that kind of interview. It's the appetite is there to hear about this. And as I said, we all need to sort of play to our own strengths. And because we don't have like a membership base, that is, something that we want to amplify and help others and others do. So I'm really happy to hear any questions you have about that. I hope that's given you a bit of an overview of sort of the history and what we can emphasize going forward.
But I don't know if any of you've got questions to any of our panelists, either Lalitha about the facts and figures she set out in her presentation, Katie about how you can get involved in the campaign to prevent the cut, or to Keir when he hopefully reappears in just a minute, about some of that really practical information and sort of ways to support people who will be affected by the cut. So if you could pop your questions in the chat, I'll see if things come in. Otherwise, I will have to exercise the chair's discretion and ask something all of my own. While people are thinking, I had a question for Lalitha, just because it was something that sort of really fascinated me in your slides. I'd never seen before that kind of differential between North London and South London that had shown up through the furlough scheme, and I don't know if you could say any more about why, if you know why that is, about whether is it just about sort of different types of employment. It was not something I'd sort of picked up before. I found that fascinating.
Yeah, that's definitely like a really interesting one for me as well. So that's not my chart. I'm not 100% the expert on it, but from what I know, it happens that like a lot of people who live in North London may be more likely to have jobs that are reliant on sort of like tourism or like more customer facing roles. So for example, like when lockdown hit, a lot of people weren't working in offices anymore, they were working from home. And that also affects the amount of business that, say, for example, like cafes or bars in central London will be getting. So for a lot of people, they may remain on furlough because like their businesses might not need as many employees to come back to work. Or another thing that is quite important when we talk about London is sort of the travel industry and airports in particular. So I think on that chart, Hounslow was one of the boroughs where furlough rates were the highest, and that's where Heathrow Airport is. And I know, so I'm from around that area, and I know a lot of jobs in that area are reliant on the airport. So I think those are some sort of like big reasons why this is the case and why furlough rates for other areas may have gone down, but for areas of North London, they're still pretty high.
Thank you, Mary. That it's really interesting to kind of, I think so often we talk about the city as a whole, and something Liza's always telling me, to think about the difference between boroughs and, their different makeups and their different constituents and the different sort of employment they have. So it's a really important reminder. The data forces us to do that, so it's helpful.